Stop what you're doing right now, because what I'm about to show you changes everything you thought you knew about silver. 3 hours ago, the Vice President of the United States stood in front of representatives from more than 50 countries at the State Department, and he said 5 words that could permanently alter the silver market. We will establish price floors. Not might, not considering, will. Mark here from GoFinance. JD Vance looked at 50 nations and said the United States is going to guarantee a minimum price for critical minerals. And as of November 2025, silver is officially on that list. Your silver. The silver sitting in your safe. The silver in your IRA. The silver in that tube of Eagles you bought 3 years ago when everyone called you crazy. The Vice President of the United States just told the world that the government wants that metal to cost more. Not less, more. And the mechanism he described? Tariffs. Adjustable tariffs. Meaning if China or anyone else tries to flood the market with cheap silver to crush your investment, the United States government will slap a tariff on it to keep the price above a guaranteed floor. This is not a rumor. This is not a social media screenshot. This happened today, February 4th, 2026, on camera at the State Department in front of the world. And by the end of this video, I'm going to show you exactly what this means for physical silver, what it means for paper silver, what it does to the short sellers, and whether $1,000 silver is fantasy or just a matter of time. But first, I need to show you something that convinced me this announcement was coming. Something so broken that I genuinely do not understand how this system has not already collapsed. Now, before we go further, drop a comment right now. Tell me where you're watching from. Are you in the US, Europe, Asia? And tell me honestly, do you think $1,000 silver is possible, or is that pure hype? I want to know what you think after you see the data. Subscribe to GoFinance if you haven't already. Because what I'm about to show you is information Wall Street does not want going viral. Here's what Vance actually said, because the exact words matter. He said, and this is a direct quote from today's ministerial, "These reference prices will operate as a floor maintained through adjustable tariffs to uphold pricing integrity." He said, "We want to eliminate that problem of people flooding into our markets with cheap critical minerals to undercut our domestic manufacturers, because we know, of course, that as soon as they have undercut our domestic makers, they leave the market. And the people who undercut them then jack up the price to a completely unfair level." Read that again. The Vice President just described on the global stage a strategy where the government uses tariffs as a weapon to prevent anyone from selling critical minerals below a certain price. That is a price floor. And he didn't stop there. He said the United States is proposing a trading bloc among allies and partners, one that guarantees American access to American industrial might, while also expanding production across the entire zone. Secretary of the Interior Doug Burgum confirmed that 30 countries have already expressed interest in joining. This is not a press release from a junior staffer. This is the number 2 official in the United States government telling 50 nations that America is building an economic alliance specifically to control the price of the metals that run the modern world. And silver is one of them. Now, I need you to understand something critical, because last week the media told you the exact opposite. On January 30th, Reuters reported that the Trump administration was backing away from individual company price floors. The headline made it sound like price floors were dead. Australian mining stocks dropped, silver investors panicked, and the narrative became that the whole thing was falling apart. That narrative was wrong. What died last week was one approach. Individual deals with individual companies, one at a time. Slow, expensive, politically messy. That approach was never going to scale. What Vance announced today is completely different. This is not a deal with one company. This is a system. Tariffs applied across an entire trading bloc. If the world price of silver drops below whatever the reference price is, a tariff automatically kicks in to bring the import price back up to the floor. No congressional funding needed, no individual negotiations. The tariff is the mechanism. And the president already has the authority to impose it under Section 232, which Trump signed on January 14th, declaring critical mineral imports a threat to national security. So the media said price floors are dead. And today a much bigger version of price floors was born. The market hasn't figured this out yet. When it does, what happens next could be historic. But before I get to the price targets, you need to understand why the government is doing this at all, because the answer tells you everything about where this is going. On November 7th, 2025, the United States Geological Survey did something it has never done before. It put silver on the official critical minerals list. Silver had never been on it. Not during World War II, when the Manhattan Project borrowed 430 million ounces of silver from the national stockpile to build the atomic bomb. Not during the Cold War. Not during any crisis in American history. But it's on the list now. Same legal category as uranium. That classification unlocks federal investment, fast-tracked mining permits, stockpiling authority, and yes, price floors, all in the name of national security. And before I show you why, there's something I need you to hold in your mind, because I'm going to come back to it later. And when I do, it's going to reframe every number I'm about to give you. 5 government agencies, including the Department of Defense, stopped reporting how much silver the military uses. They stopped in 1996. No explanation. They just went dark. 30 years of silence. Remember that. You already know silver is being consumed. Solar panels, AI servers, electric vehicles, cruise missiles. You know demand is exploding and supply can't keep up. You've heard those numbers, so I'm not going to repeat them. Instead, I'm going to show you the number that nobody is talking about. 820 million ounces. That's the cumulative supply deficit over the last 5 years. 5 consecutive years where the world consumed more silver than it produced. 820 million ounces short. That's the equivalent of 10 months of every silver mine on Earth running at full capacity. 10 months of global production that was consumed and never replaced. And 71% of all silver is mined as a byproduct of copper and zinc. Which means higher silver prices do not produce more silver. There's no emergency button. There's no quick fix. And the people in charge just admitted it. That's why Vance made this announcement today. But there's a number behind that number that's far more dangerous. And almost nobody's paying attention to it. 356 to 1. That's the current ratio of paper silver claims to physical silver backing them. You've heard about this ratio before, but I don't think people fully understand what a price floor does to it. So let me show you. Right now, the silver futures market functions. Because both sides believe they can win. The longs believe the price is going up. The shorts believe they can drive it down or at minimum roll their positions and avoid delivery. That balance is what keeps the paper market alive. But what happens to that balance? When the United States government announces that it will not allow the price to fall below a certain level, think about it. If you're short silver, your entire thesis is that the price will drop. That's how you make money. You sell high and buy back low. But if the government has just told you that it will use tariffs to prevent the price from falling below a floor, your downside as a short is now capped. Not by the market, by the United States government. Your maximum gain is the distance between the current price and the floor. But your maximum loss is unlimited because the price can still go up as far as supply and demand will take it. That's a terrible trade, and the people running the short positions at the major banks know it. There are currently massive concentrated short positions in silver on COMEX, positions that have been there for years, positions that have been used to manage and suppress the price every time it gets uncomfortable. Those positions just became dramatically more dangerous to hold, and then China made it worse, much worse. On January 1st of this year, China locked the door on silver exports. New restrictions. Only 44 companies in the entire country qualified for export licenses. Hundreds of smaller refiners that have been supplying the global market for decades are now blocked. China controls 60 to 70% of the world's refined silver supply, and they just choked it. Their state media described this policy as upgrading silver from a common commodity to a strategic resource. That's the exact same language China used before it restricted rare earth exports. Same playbook, different metal. And Elon Musk posted about it. His words were, "This is not good. Silver is needed in many industrial processes. But here's what I want you to see. The 30-country trading bloc that Vance announced today is a direct response to China's move. And the countries that are joining tell you everything. Think about where silver comes from. Mexico is the world's largest silver mining nation. Peru is second. Chile, Australia, Poland, and the United States round out the top producers. Now think about which countries would join an American-led trading bloc with price floors. These are the countries that want higher silver prices because they're the ones mining it. Mexico, Peru, Australia, these are American allies and trading partners. If they join the bloc, which Burgum says 30 countries are already interested in, it means the majority of the world's mined silver supply would be inside a system with a guaranteed minimum price. And everyone outside the bloc, primarily China, would face tariffs. So China restricts refined silver exports to the world. And America responds by building a trading bloc that locks up the raw mining supply and puts tariffs on anything China tries to sell. That's not a trade war. That's a siege. Both sides are trying to control the silver supply chain. And either side is backing down. On February 2nd, 2 days before Vance's announcement, the White House launched Project Vault. And this deserves your full attention, because nobody is giving it the analysis it warrants. Project Vault is a $12 billion critical mineral stockpile, $10 billion from the Export-Import Bank, the largest single loan in the bank's history, 15-year term, $1.67 billion in private capital. That was oversubscribed, meaning more companies wanted in than there was room for. The participants include General Motors, Boeing, Stellantis, Corning, GE Vernova, and Google. The commodity trading firms Hartree Partners, Trafigura, and Mercuria are handling the physical logistics. Ask yourself why Google is in a critical mineral stockpile. Google doesn't build cars. Google doesn't build missiles. Google builds data centers. And every AI server in those data centers uses 3 times more silver than a traditional server. Google is not investing in Project Vault because it cares about mining. It's investing because it's terrified of not having enough silver to build the AI infrastructure it needs. When the biggest technology company on the planet starts stockpiling industrial metals alongside defense contractors, that tells you something the stock market hasn't priced in yet. And the structure of Project Vault matters. The manufacturers in the program get guaranteed access to critical minerals at set prices. Read that again, set prices. That's a price floor embedded inside a government-backed stockpile. This is not a futures contract. This is not a paper promise. This is the United States government buying physical metal, storing it, and guaranteeing American companies can access it at a fixed cost. If the market price spikes, they're protected. If China cuts supply, they're protected. This is economic warfare infrastructure. And it was built in weeks. Look at what silver has done in the last 12 months and tell me the market is overreacting. Silver went from $31 in January 2025 to an all-time high of $120 in January 2026, almost 4 times. Then it crashed 27% in a single day on January 31st, the worst session since the Hunt brothers in 1980. And within 4 days, it bounced back to 90. It's sitting at 90 as I record this, a 190% return in 12 months, even after the worst crash in 46 years. Ask yourself, what kind of asset does that? What kind of asset gets cut in half and stands back up in 4 days? An asset the world cannot function without. The biggest banks are at war over what happens next. Citigroup says 150 within 3 months. Goldman Sachs says 85 to 100 as the 2026 average. On the other side, JP Morgan's Kalanovich calls it a speculative mania and targets 50. Bank of America ranked silver number 1 for bubble-like dynamics, ahead of every stock, every crypto, every commodity on Earth. I'm going to tell you what I honestly think. Both sides are partially right. The speculative frenzy that took silver to 120 was real. That crash proved leverage can kill you. And anyone who says silver only goes up is lying to your face. But the deficit is real. The China restrictions are real. The critical mineral designation is real. And the price floor announced 3 hours ago is real. Those are not speculative. Those are policy. And policy doesn't crash 27% in a day. So $1,000 silver, the number in the title. I owe you honesty, not hype. Silver is at 90. 1,000 would be 11 times higher. The gold to silver ratio at that price would be 5 to 1. That has never existed in modern history. So I'm not going to sit here and tell you $1,000 silver is coming next week. That would be a lie. But 12 months ago, silver was at 31. If I told you then that it would hit 120, you would have closed this video. You would have said that's insane. If someone had told you the government would put silver on the critical minerals list, create a $12 billion stockpile, and announce tariff-enforced price floors, you would have said that person was delusional. It happened. All of it. In 12 months. So I don't ask if $1,000 silver is crazy. I ask what would it take? Gold at 10,000, which Yardeni Research is already projecting, with the ratio at 10 to 1, which is still wider than the historical average, or a currency debasement event, which is exactly what central bank gold buying at this pace is pricing in. The 1980 silver peak of $50 adjusted for real inflation is somewhere between $150 and $1,400 today, depending on whose numbers you use. That's Ted Butler's analysis. At 90, silver is still historically cheap relative to how much money has been printed. 1,000 is not a 2026 event, but this decade, if gold hits 10,000 and the deficit deepens and the ratio compresses, 300 to 500 becomes a very real conversation. And from there, the gap to 1,000 shrinks fast. But here's what matters more than any price target. And this is the part that almost nobody's talking about. A price floor changes the fundamental nature of an investment. Think about what silver was before today. And now I need to come back to the thing I told you to remember. In 1996, 5 United States government agencies, including the Department of Defense, stopped reporting how much silver the military consumes. 1 year they reported the numbers. The next year, silence. And that silence has lasted 30 years. The Silver Institute does not include military applications in its annual supply and demand reports. Not missiles, not satellites, not radar, not naval electronics, not guidance systems, none of it. The most detailed silver accounting on the planet has a hole in it the size of the entire United States military. The 820 million ounce deficit I showed you, that number does not include a single ounce consumed by the largest military on Earth. And here's why that should terrify you. The United States has launched over 2,300 Tomahawk cruise missiles since 1991. Each one contains silver in its guidance systems, batteries, and electronics. Estimates range from 15 to 500 ounces per missile. Every single ounce was destroyed on impact, never recovered, never counted in the deficit. And Tomahawks are just one weapon system. Think about the entire U.S. Navy. Every Aegis destroyer, every submarine, every F-35, silver in the radar, silver in the electronics, silver in the communication systems. None of it is counted. The real deficit could be dramatically larger than 820 million ounces. And the government that classified the data is the same government that just told you silver is critical to national security. They know the real number. They're not sharing it. And they just announced price floors. Draw your own conclusions. So where does this leave us? Fact. 5 consecutive years of supply deficit, 820 million ounces short on paper. That's only what they're willing to show us. Fact. China controls 60 to 70% of refined supply and locked the door 5 weeks ago. Fact. Silver was designated a critical mineral for the first time in history. Fact. Section 232. National security threat. Fact. Project Vault. $12 billion. Google, Boeing, GM, all stockpiling. Fact. 3 hours ago, Vance announced tariff-enforced price floors to 50 nations. Fact. The short sellers on COMEX are now fighting the United States government. In fact, nobody knows how much silver the military has actually consumed because they stopped reporting it 30 years ago. These are not opinions. These are documented events. Every single one points in the same direction. Is $1,000 silver guaranteed? No. Is it mathematically possible? Yes. Is the direction clear? In my opinion, it has never been clearer in my lifetime. The United States government does not build $12 billion stockpiles for metals it thinks are going down. It does not assemble trading blocks for commodities it thinks are overpriced. It does not designate metals as critical to national security because they're in surplus. They're telling you right now, today, on camera, in front of the world. The question is whether you're listening. I want to speak directly to the skeptics. You're going to show up in the comments. You're going to say this is hype. Silver is a bubble. JP Morgan is right. You might be right about the short term. Silver crashed 27% in a single day last week. It can happen again. If you're leveraged, you can get wiped out. I'm not here to tell you to mortgage your house and buy silver. That would be irresponsible, and I will never do it. But answer one question for me. If silver is just hype, why is the United States government building a $12 billion